The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen. My name is John Needham. It's my pleasure to be with you today, and here we are. Marcel, bonjour, my friend. Yes. Okay, well, look, we've got a great crowd with us today. Some of them are still wandering in, but that's fine. They'll get themselves settled soon enough. And a delight for me to be with you today, especially to wish happy Thanksgiving to all of our American clients. I know that it's Wednesday night where you are, and most of you will be winding down now, getting ready for the Thanksgiving weekend, and probably traveling, a lot of you, shortly. So it's a great opportunity just to talk about some of the things we've been doing, and a little bit about what's to come between now and Christmas. We think that we're in for a very exciting period of trading leading up into Christmas. So we'll deal with all of that as we get there one at a time. Let me first say, if I may, that I've had a bit of the flu, like a lot of people, and I'm just commencing a course of antibiotics, so I'll be really fit and well for the tutorial at Waiheke Island in the beautiful Hauraki Gulf, which starts on Tuesday. But if I should happen to have a spasm of coughing or grunting during this webinar, I'll mute the microphone so I don't assail your ears with that. But if you hear the audio go off for just a few seconds, it's just me having a minor spasm over here. Hopefully that won't happen, but there we are. Okay, so we had a number of things we wanted to deal with today. I wanted to show you some of the ways you can trade FractZen, which is our new short-term trading program that a lot of you have trialed and a lot of you have now subscribed to. I want to show you some alternate ways of looking at that. And then I'm going to take you on to the S&P and the major market targets, and where we are with those, and where we're likely to get to. And then towards the end of this presentation, I'm just going to say a few words on our Auto Trade GMAT program, which is working so wonderfully, but there are a few pitfalls there, and we do get people who get very mixed results. We have people who are literally doubling their money in 3 or 4 or 5 or 6 months. We have other people doing trials who don't do so well. And I want to just show you some of the pitfalls in that. But to start with, let me move this screen away here. And let's start looking at all the things that we've got in FractZen. Okay, let's get rid of this, and let's bring up, first of all, our charts. And let's look a little bit at FractZen and talk particularly about stops. The first thing, let me say to you about FractZen is that this is a program that runs on our servers on a proprietary algorithm that I've written, and it's driven by volatility, and that's a volatility of a type you haven't seen before. It's not the VIX or anything related to the VIX. Terry, can you hear me all right there? Are we broadcasting all right? Everyone hear me well? I should have asked you that a little earlier. Yes, okay, we've got good audio. That's great. I'm many thousands of miles away from you folks. I'm actually in the Gold Coast in Australia, and I neglected to tell you, you're getting into winter there well and truly. It's a beautiful, gorgeous summer day here, and we're almost a day ahead of you because of the positions we are on the globe, and it is actually Thursday the 28th of November here in Australia. It's 11:35 where I am in the morning. So we've already hit Thanksgiving Day. We don't have Thanksgiving in Australia or New Zealand. It's sort of a cultural holiday for America primarily, although Terry tells me that they have a version of it. Hello, Peter. How are you? And Mark, yeah, thanks, guys. They have a version of it in Canada, but we don't here. But I'm getting a holiday today, so after I've finished with this webinar, I'm going to, very, very hot here, I'm going to go and take a swim in my new swimming pool that's about 3/4 of the way through being installed. So it's all good. But I'm thinking of all our friends in America. Hope you have a wonderful Thanksgiving. Don't eat too much, folks, but drink as much as you can, and be as bad as is humanly possible. That's always my motto about celebrations. Okay, so first thing let me say about FractZen, we had an email this morning, Mary, from you, seeking some markets that work better in your time zone. Mary's a long-time Danielcode member and one of our hostesses actually for the upcoming Waiheke tutorial. Lovely lady, great friend of mine, and she lives in New Zealand. And she is asked today what are the markets where the signals will issue in her time zone. Well, the logical answer to that is they'll tend to be the markets that have dominant trading in the what's called the Asian session, the daylight session in Australia and New Zealand. But the reality is that many of you are making the same mistake. You can't ask the markets to act in a way that suits your lifestyle. Markets do what they do, and our job as traders is to either be on top of that or alternately manage it as best we can. This is pretty much a constant theme. I had a talk with another one of my friends who's a long-time Danielcode member, done tutorials, saying that he's a very busy guy. He's got he's an ophthalmic surgeon, and he wants to trade, but he's only got 15 minutes a day to allocate to his trading. Now, we do everything we can to make that possible. If you were to run our auto trade programs, you could do all of your trading in less than 15 minutes a day, probably less than about 5 minutes a day. But it will never be as good as we've made it. It will never be as good and replace the dedicated trader who's across charts, who's aware of what market behavior is. And they tend to be the people on the other side of your trade. So yes, we can get you to a very, very high stage of trading expertise, not investing a lot of time, but the reality is that on the other hand, the more time you do invest and commit to this thing, the better you will be. So, but Mary asked what market can she find that will work in her time zone? And the answer is we don't have a clue. The way FractZen works is that the algorithm reads volatility, and we know not when that volatility is going to come. It can come at any time, and if you're trying to pick a market that suits your particular time frame, you're guilty of a selection bias, which is the number one problem that everyone has. You tend to pick markets that you feel attracted to or that you have some affinity to, or you tend to pick markets that will work in your time frame. But that is just another form of selection bias. And that means that you are, in effect, saying that you can forecast when volatility is going to come into the markets, because it's volatility that drives successful trading. Markets have periods where they're expanding and volatile, and other periods where they're contracting and quiet and docile. And with almost all forms of trading, our sort of trading in particular, we make our money when markets are expanding and volatile, and when they're not expanding, we are fighting an unarmed battle against poverty. That is, we're getting stopped out, and we're using our stop-loss management techniques to manage our risk, and we're going to focus very much on the need for all of that today. Moving on, and first just looking at FractZen. I've taken out here a chart to show you some of the simpler ways that you can trade FractZen and your stop loss management and your targets. And I'd like you to understand that there are different strokes for different folks. There are people who have a fairly substantial risk appetite, and they will want to trade in a particular way, and they will be rewarded for that. And there are other people who have no risk appetite. They just can't abide losses of any sort, and they will trade another way, and they will be rewarded for that. But you can't cross over. You'll be one or the other. Let's start first of all with Mary. I hope I've made that point to you and to any others who are looking to select markets. If you select markets that suit your time cycle of trading, or you think they will, you'll almost certainly be wrong, but you are suffering selection bias. One of the major points about the Danielcode that people don't appreciate is that it's different in every way to almost any other trading system that you've ever heard of. And one of the ways it's different is that we trade a vast number of markets. We trade 14 or 15 futures markets, and about the same in Forex. And the reason, and that's very different to most traders who will have one or sometimes two or three favorite markets and stick to those markets. They're working on the basis that they can sufficiently trade those markets to capture the volatility when it comes. But as one of our members said to me the other day, and I suspect that she only trades one or two markets, almost certainly one of them is gold. That's always very popular with people. It shouldn't be. It's by no means one of the best trading markets. In fact, it's one of the worst trading markets, but it's very popular. She was saying, look, I understand we go through the quiet periods and we manage our stops and we fight our way through and we win a little bit and we lose a little bit. And then all of a sudden we get this enormous run of volatility. We make a massive amount of money. But it doesn't happen very often. And that is precisely the reason why we trade such a large number of markets, because I can't forecast future volatility. Nobody can. You can assume if I can't do it, it can't be done. I will find it one day. We have got some leads into that. There are particular fast patterns in markets. The waterfall pattern, which I teach to some of my tutorial students, is one of them, where we can forecast with a high degree of accuracy those big cascading down moves. But we can't overall forecast future volatility. And for that reason, to capture the volatility, what we need to do is we need to trade a wide range of markets. So optimally, you would trade all of the markets. If you're a futures trader, take FractZen for all of them, in the same way as with the TO3s and the blue line trades, we trade all the markets. That leads to some practical questions, though, that most of you don't have big enough accounts to do that with the margins. And so we have to have some management procedures that allow us to handle these trading programs in smaller accounts. And we do that with a number of techniques, the best one of which is to put on all of your orders and let the market select. And when you've reached the limit of your risk profile, dependent on the size of your account, then you cancel the rest of the orders. But that means you need to be paying attention to the market. The other way of doing it is the way that some of you are doing it. You're just selecting 1, 2, 3, or 4 markets. That is selection bias. It will still work, but you are degrading the performance of the program. So as long as you understand that, I understand that there are practical limits as to how much people can trade, but selection bias is always the first problem. It's the reason that many of you don't get the results that we create and get on our model account. So anyway, let's tear into this and have a look at the first thing. What you're seeing here is a daily chart of the USD CAD, or Canadian dollar. Let me make sure that you're seeing this. I'm just trying to find this pane that lets us see this, folks. They've had an upgrade. You know, the greatest virus in the world is Microsoft. Every time they do an upgrade, it pretty well ruins what we're trying to do. And this place has had an upgrade anyway. Yes, you're seeing the right screen right now. This is the USD Canadian dollar daily chart, and today we had a FractZen buy signal. I want to just go through the anatomy of this with you and show you the alternate ways of trading it. We had a buy signal at 2:58 US Eastern Time. That's 2:58 in the morning. But bear in mind that the signals that come to you through FractZen, through onto your cell phone, they are generated and they are time-stamped US Eastern Time. When you look at your chart, if you're using Trade Navigator and you've got them set up properly, Forex is in GMT, or Greenwich Mean Time, which is the proper name for it. They now call it Universal Time because the rest of the world doesn't like the focus on Greenwich, which of course is a very, very lovely little village just near London in Britain. So we had our buy signal today at 2:58 is what your signal would have said when you got the buy signal on your cell phone, and that came at 105.60, which is the blue line on this chart. So the signal comes through to you and it just says buy. So that means buy at market as soon as you can. So then let's look where you would have put your stop, and there's a number of ways of doing these. One of the ways is to have a fairly generous stop, which will allow the market to fluctuate above and below, and that will give you excellent results. But first of all, I'm going to concentrate on showing you, those of you who are a little bit more risk averse, where you would put your stop. So have a look at this. Here was the buy signal, came at 105.60. The market closed. I had 105.95, but since I've done the daily upgrade, it's 105.94. There's only one tick difference. It's the same thing. So that trade made $339 per one contract in not terribly long. So let's have a look at where we put our chart. So when you get this, one of the ways of determining where to put your stop loss is to immediately, once you get the signal, have a look at a shorter term chart. This is a 30-minute chart. I'm just squeezing it up now so you can see more of what's happened. This is a 30-minute chart. And you'll notice when I sent out this invitation to you, I said execution is everything, or execution is primary. There are some rules in trading that you really, really need to observe, because there are things that markets habitually do. And one of the most important things that markets habitually do is they don't take out swing points unless they mean it. And this is an absolutely fantastic example. So one of the ways you could trade FractZen is you can simply start off by saying, I'll come to a comfortable dollar amount. I'm going to tell you more about that later and give you some suggestions as to what they could be. But I'm going to have a fixed dollar amount as my stop loss, and that's going to be my stop, and I'll make it good till cancelled. Or alternately, you can take that same dollar stop and you can say, I'm going to make it a trailing dollar stop. So as the market moves up, so will your stop loss. And that way, you're not only got your stop on, but you're also protecting profits to a degree. So here we're taking the 30-minute chart, and you can see that at this point right here, this is the bar which is closed at 8 o'clock. And this is GMT. This is the Forex chart, so it's in Greenwich Mean Time. And you can see that it was at a price of, excuse me, 105.60 right then in that moment when you got the buy signal. The market then retraced, and if we were looking at this chart, the logical thing we would say is we will put our stop loss underneath the most recent swing. Okay, now there's a whole number of swings in here, which you can see. There's a swing there, there's a minor swing there, there's another swing there, but this is the major swing here. And you can find that swing by using the Trade Navigator tool and put on a swing. It will do all that for you automatically, and you can tell it how strong you want the swing. I suggest here that you want probably 2 or 3 bars either side of the swing in that Trade Navigator setup. Let me just show you. If you right-click these charts and go to Edit Chart Settings, it will come up with these various things, one of which we don't, excuse me, have a swing. Here we do. We have a swing point here. And when you put in that swing point to add, you can see that one of the things in it is strength, and you can change that. That actually means how many bars higher or lower do you want either side of the swing. So if we put that on there now, you would find that's set at 2. The alt method is 1, that's the standard, but we've had the strength of 2. We've asked for 2 bars either side of the swing before we create a swing point. So that's a fairly weak swing. You could push that up to 4 or 5, and the point is this is the last important swing before you got the buy signal. The market was right up there at that stage at 105.47. So from there, your stop should have been below. If you're not using a dollar stop, if you want to use a fixed dollar stop, that's all right. If you want to use a more intelligent approach, identify the last swing. The low of that was 105.28, and you would put your stop a few ticks below that. Typically in Forex, we use 5 ticks. In futures, we use 2 ticks. So look what the market did. It ran all the way back to retest that low, and look at what this low is here, 105.28, exactly the same as the previous major swing which we identified back here on Tuesday. But it did not violate that swing. So if you had your stop in the place I teach you, which is the last swing, and you can speed this up. You can do this on a 5-minute chart if you want to. 20 minutes. This is a 30-minute. It's pretty cruisy, and it works terribly well. If you put your stop at 105.28 minus the 5-tick buffer at 105.23, your stop did not get hit. If you put your stop anywhere other than that, because you didn't know where stops should go, you got hit. But from there on, assume enough of you have done the videos, the courses. I talk about this all the time. Up it went, and it closed the day at 105.94. So that gave you a nice profit of about $330. And if you take 105.28 minus 5 away from where your order came in to buy it at 105.60, you'll find that on the 30-minute chart, that stop loss was about 32 ticks, so about, $320. Let me go back to the previous chart, and you'll see that this trade made into today's close, and who knows, it may have a lot further to go. You made $339 in a matter of some hours. So that's one of the ways you can create the right place to put your stop. And these stops are not big, and if you want them smaller, you can make the chart faster. You'd get a much closer stop on a 5-minute chart or a 10-minute chart, but there is a line at which tight stops become self-defeating. Excuse me. So don't make them too tight, and this one in particular, this is USD CAD we're looking at. That's about right, and you've had a 100% return on that trade in a very short time. One of the other points that's most important, if you would all make note of this, is that FractZen works best with the blue line trades and the TO3 trades, and there's a reason for that. What happens with the blue line trades is there's a maturity of time and price. That is, the market has reached a recognized designated Danielcode number, and our stochastics are in either overbought or oversold. Just look at the manual, tell you how you work that out. And that means that the market is ripe for a turn. In a similar way, the TO3 signals are actually time turn signals. They're a fractal of our major time cycles, which you can read about in the two masterclass articles, which you can find under the Articles tab of the Danielcode website. When markets reach that stage, one of two things happen. Most of the time, they'll reverse, and that's why we use them as turn signals. When they don't reverse, it requires an additional or new power to come into the market to keep it going the way it is. In other words, if the balance between supply and demand stays constant, they will turn at the blue line signals and the TO3 signals. When they don't turn, it means a new power has come into the market. Demand has increased itself, oversupply, to force the market to continue upwards. And that's what's happened here. USD CAD, this particular one we're looking at, was a blue line signal for Tuesday. Blue line signals are valid for 3 days, Tuesday, Wednesday, and Thursday. It was valid. So they were the 3 days if you wanted to pick and choose. Trade FractZen when there's a blue line signal or when there's a TO3 signal, and trade it both ways. It doesn't matter. It's not like we're looking for the turn and only taking, in this case, the sell signal. We'll take either one. We'll take it going up or down because it means one of two things. Either it's met its balance in time and price and it's going to turn, which is great, or there's a new force coming into the market, a new force of demand in this case, which has forced this market higher. And that's the primo time to trade FractZen, if you want to be selective, is when there's either a blue line signal current, remember they're current for 3 days, including the day of posting, or a TO3 signal, and they are valid for 2 days, including the day of posting. So if you want to be at all selective about when you trade FractZen, those are the very, very best times to trade them. And I can tell you that statistically the difference in returns is very dramatic. So point one was to use a reasonably tight stop loss based on going to a 30-minute chart or a 20-minute chart and identifying the last major swing and putting your stop loss underneath that. Let me just go back and show you, for those of you who are not familiar, how to do this. Excuse me, I'm just reading a few posts that are coming through. Okay, I'll deal with all of those. Hello, Bo. Mac, I'll deal with that too. So let's just go back to the 30. And you can see that the swing here is not working the way we want it to. We wanted it to show just the last major swing, which was this one. This swing here happens after the order's been taken and you're long. You have to sit through this pullback, but it won't worry you much, and it won't worry you at all if you put your stop in the right place. So let's go to our right-click on the chart anywhere, and it will bring up these settings, and we could change this strength indicator here from 2, let us say, to 5, and you'll now see that's still maybe not strong enough because you could have used this swing here and you'd have got stopped out. So right-click anywhere, go to Edit. Let's see what happens at 7, and it's all this low stuff through here. Let's see if we move up further to that. These are only 30-minute bars. Okay, now you've got it. So this particular chart, 10 or 11 was the setting that gave you the last swing. And if you use that tool from Trade Navigator, you'll be able to identify these swings very easily. So nothing in markets happened by accident. There's your low before the buy order was issued, 105.28. Here's the retest, 105.28, exactly the same. If you didn't know to put your stop under the swing and to provide that buffer, excuse me, my friend shift has started. He usually gets me breaking up into hysterics about usually not this early in the webinar. Fluffy Cuffs wants to know if antibiotics means no Bloody Marys on the Waiheke next week. No bloody way, mate. That's why I'm taking the antibiotics. In my view, Bloody Marys are absolutely the best antibiotic in the world. And if you flood your system with them, you'll never get sick. But that's hard to do when you're actually working and creating signals and charts. But thank you for that thought. So anyway, there it is, folks. You can see how to create those swings. Just play around with them a bit, get a feel for them. So that's method 2. Method 1 was take a fixed dollar stop that you're happy with, and then method 2 is to do this and to identify the last swing. If we take off our swings now, we can see that that was a blue line trade. Some of the others that are worth looking at, Euro, USD, USD, JPY, they're all blue line trades. They all did very well. Now, what we're doing, Terry is doing endless work on FractZen to tweak it, to make its performance, not really its performance so much as the information we convey to you folks better. Now, when I say something like that, I usually get panicky emails from people saying, oh, haven't you tested it enough? Something. Nothing to do with that. It's just that life is a continuing process of, refining and improving. And one of the things in the particular business that we do is we need to make sure that we're getting the appropriate information to you. And what we're going to do, that Terry is working on, is we're going to give you an indicative minimum stop loss. Now, don't forget there's another way of trading this, which I'm going to come to, but the minimums are not as big as you think. In the Aussie USD, they're around about 35 ticks at the moment. Now, remember, these charts change almost every day, but certainly every 3 days. The charts that these FractZen runs off change as volatility changes. So the sensitivity of the volatility algorithm moves every day up and down, and we can't give you that information every day. We simply don't have the capacity to do it in an efficient way, and we don't have enough staff to do it manually. But we're going to give you once a week a suggested minimum stop loss, which will be better than nothing and better than guessing. And they're reasonably small. To give you an idea, Aussie USD is going to be right now about 36 ticks, Euro USD 32, USD JPY 29, oil 70 ticks, dollar index DX 30, E-mini, which I know you all trade, 19 ticks. And they're about the sort of minimum size ticks that you want. Now, let me find some documents that I want to show you. Okie doke. This is, let me wait and see, and this has changed. You should be able to see it shortly. You can see it now. These are today's charts. They're just the first two that have come through from Sister Sage, who's been recording this stuff for us. Sage, thank you. She thought these were particularly delicious and wanted you to see them. And we're going to go through a whole range of charts. The more of these you'll see, the more you'll understand a bit how this works and be able to categorize your strategies for dealing with stop-loss management. What you can see in this chart, this is actually a 240-minute chart. She takes the signals that come through on the from the algorithm, the FractZen program that creates and sends the signals direct to your cell phone, and she converts them into an appropriate chart. This was USD JPY today, and as you can see, this now covers the period from July the 19th. For those of you who are a little more patient and are happy to trade these signals as they come out, that's made $3,500 odd. You can certainly buy all the Thanksgiving turkey you're interested in, and a lot of other things as well with FractZen. This is the other one that Sage sent me today. This is Aussie USD, and of course it's been in play lately. It's The sell signal for this was posted on Monday, was a blue line signal, so Monday, Tuesday and Wednesday was the time to be trading this, and if you have a look, it's just been pretty fantastic. And they're the FractZen signals for you. Let's move on and just show you more and more things. Here's gold, and you can see the losing trades are in red. Now, one of the characteristics about FractZen is it generally doesn't retrace the bar on which the signal is created. So if you were to trade FractZen with the fairly tight stops that I've indicated to you, you would miss out on about 20 or 25% of the trades. That is, you would be stopped out before the market got going and gave you all the lovely lolly. But if you can manage your stop loss properly and get rid of the losers, the amount of money that this program makes is absolutely incredible. So you can start adding all this up in your mind, and as you're doing it, have a look where you see the red ones and say, I could have stopped that for 30-odd ticks. She uses pips here. Pips is a funny thing that Forex people have invented to try and distinguish themselves from futures traders. My view is that pips are something you find in oranges and lemons, and you'll never hear me talk about pips. But Sage, of course, has had only a small part of her mind, but she had a large mind, but a small part has been polluted by doing courses with other people who've obviously told her about pips. So if you don't know what pips are, don't be concerned. They're the same as ticks. It's just an attempt by Forex people to pretend that there's something different about Forex. And there are quite a few things different, but that's not one of them. So as we scroll through these charts, have a look at how much money you could have made. And where you see the red annotations, they're the losers. Just calculate in your mind what sort of a stop loss you could have used. Here's one. This is USD CAD, and they're no big losers in there anyway. That's a pretty nice chart. But I am going to show you some with losers. Here's one. This is soybeans, which we're going to go into a bit further, and you can see that there's 1, 2, 3 losers, not very big. And then you get 2 decent-sized winners out of it. Now, I put these two charts, GBP, JPY, in red because I want you to be aware that depending on how much of a chart you're looking at is how much of a picture you'll get. This is a particularly nice chart that Sage sent me, and it's 2,000, 3,000 and something dollars. All profit, looks pretty good. Well, you have a look at the next chart. This is exactly the same chart, but taken back over a longer period. And you can see that there were some decent-sized losses in there. One in particular, 250 tick loss, over $2,500. And I wanted to show you this just to reinforce the need to use ticks, because FractZen is not perfect. What's she saying? No, pips are... Oh, okay. Sage is pleading innocence, folks. She's saying her mind has not been polluted. She's entirely pure and educated only by the Danielcode, which is a wonderful thing. The pips are automatically in the dollar difference tool that Trade Navigator provides. So, Sage, you have my undying apologies, darling, and I will look forward to seeing you at Waiheke in the not-so-distant future. And I'd buy you a drink if you did drink, but you know, pure in all those ways as well. So it'll have to be a soy latte or one of those funny things that you and Daryl like. So anyway, this just shows to you the need to use stops. If you can get rid of these big losses and keep them within that sort of 30, 40 tick range, then you still get all the profits because of this peculiarity with FractZen that it usually, I would say probably 75 to 80% of the time, it won't retrace the bar that gives you the signal, because it is a momentum based algorithm. Momentum's already there before it gives you the signal. So there are a number of ways that FractZen can be defeated. The most common way is that at the end of every day's trading in futures and in Forex, the exchanges enforce a hard stop on the data, which means the data stops at the time that the trading day ends. And for a momentum system, there is often not enough time to complete a bar. So you finish up with what I call a nub or part of a bar. And statistically, I haven't been able to prove whether that nub bar is valid or invalid. In other words, should the algorithm read that partial bar as part of its code or ignore it? And because there's not a sufficient bias one way or the other on the chi-squared test to tell me the answer to that, I've erred on the side of caution because I'm a lawyer and a conservative person by nature, and I've told the program not to read that nub bar. And that can defeat the program because very often the nub bar is correct. So that's one of the features that we can't control. It's a function of the exchanges turning off their data at the end of the day and leaving us with that. So just keep looking at these charts. I want you to see as many of them as you can, and just keep thinking in terms of, with Forex, thinking in terms of a 30 or 35 tick stop around that area. I'll just scroll back through these reasonably slowly so you can get another look at them. Time's moving on incredibly. I can't quite believe this. You've been with me for 45 minutes. It feels like 10 seconds. It's a pity that we can't do these webinars every day. I'd much prefer to be talking to you and showing you these things because it's a very visual business. You really do learn a lot by looking at these charts. Here's a good one. There's a $575 loss. If you kept that to around 30 ticks or $400, you'd have had $1,200 in the three losses in this period and $3,000 in wins. I think that's a pretty slick risk-reward ratio. USD CAD, USD JPY. So remember what I've told you, that the optimum time to trade FractZen is when there's a valid T or 3 or blue line signal trading, and don't just trade for the turn, just trade for whatever signals come in that time, and just have a look how that works for you. I've found it very, very successful. There you are. So there's another one with a small loss at the beginning. If you could have kept that to 30 ticks, there's another $3,000 odd profit. Much the same here. You needed to have this big 89 tick loss here controlled by stop losses. And here's the two trades from today that Sage has sent us, Aussie USD and USD JPY. Let me close that. I've got some questions coming in here, guys. I'm going to get to all of you, so don't panic. What time frame are you using? FractZen itself doesn't have a time frame. FractZen creates its signals based entirely on volatility, so it's a time morpher or a time shifter, if you like. It changes its timing all the time, but that chart that I'm showing you, have been showing you to find a logical place to put your stops, is a 30-minute chart. You can use a faster chart than that if you want to use smaller stops, but it becomes self-defeating if your stops are too small. So let's go from there. I wanted to see if I've just got some notes, the main things I want to cover here with you. I've given you an indication of what the sort of stops should be for your futures if you want. Now, they're just minimum stops. If you want to use bigger stops, that's fine. One of our tutorial graduates, Kate, posted in forum that she's using a 1.8 stop loss in oil. Well, that's $1,800. Excuse me, and that's been working very, very well for her. So what she's doing is she's taking the maximum loss that she's prepared to wear, maybe as a percentage of her trading account or some other idea, and she's then letting the market vacillate above and below that. So that's a sort of a loose stop loss control, which is fine. It's a question with trading of finding what suits you. We have people who are pro traders, and they're like me. They spend the whole day and most nights with charts. Then we have a lot of people who have full-time jobs or part-time jobs and can't spend that much time trading. And for you, we're showing you other techniques. The important thing about FractZen is I'm trying to make it readily available to everyone, and we've kept the fees down to an absolute minimum. There have been lots of thoughts about what we could do to get it into an auto trade, to do this, to do that. It's like anything. My father God bless him, used to tell me many years ago when the Concorde jet was new and exciting, and I can remember him saying, you can have the Concorde come here and paint it in your private colors with your name on the side to fly you anywhere in the world with one proviso, as long as you can afford to pay them for it. And that's pretty much what happens in services business like ours. We can do almost anything with markets, with charts, with programs, with sophistication, but the cost goes up exponentially. And particularly when we have to go outside our own resources, which are very limited, and ask other people to do this work, the cost becomes prohibitive. And because we're in the business of providing retail traders like you people these tools, we're very aware that we've got to keep costs down to a minimum. And that's why some of the more sophisticated stuff, whilst we're aware of it, we don't do it, because on a cost-price analysis, it would be wonderful. You'd love the first webinar, but very few of you would subscribe to it because it gets very expensive to go into those degrees of sophistication. So we're trying to keep FractZen simple so we can keep the cost down for you, and by keeping the cost down for you, I am hoping that you will subscribe to more markets and try and avoid as much as you can the problem of selection bias. So that was one of the things I want to talk to you about. The next thing, because time is running on very quickly, I want to talk to you about what we see as likely to happen between now and Christmas. So let's have a look at some pretty interesting charts. This first one that I'm showing you, I'm just waiting for it to change for you. It has now. This is the long-term trend chart of the 24-day chart. In other words, we have, for our timing charts and our long-term charts, we use 6, 12, and 24-day charts. That is, each bar on this chart is created from 24 trading days of price action. And one of the things you can see is we're approaching a very important inflection point. This is a long-term Danielcode trend line, or trading channel rather, running back from about 1932 from memory. And as you can see, it's very, very unusual for this market to do anything other than turn at one of these lines, and they're 1 standard deviation from the mean and 2 standard deviations from the mean. Back here, this is the dot-com bubble in 2000. It went to 2 standard deviations from the mean, turned around and collapsed. This is the low here. When this, don't forget that these trading channels morph or change as they move along. This was 1 standard deviation below the mean at the time the market was there. Here's our 2007 high, exactly at 1 standard deviation from the mean, and then this crash. This is the great 2000 crash into March 2009, which was such fun. It went to 2 standard deviations from the mean. Those of you who watch my webinars and follow my stuff will remember me saying on occasions, if this market overshoots its 1 standard deviation and goes to 2 standard deviations, it will eventually correct to -2 standard deviations, because Newton's law tells you that every action has an opposite and equal reaction. We don't see that very often because sometimes these time frames are very long. This particular time frame here is 9 years, but it's nice to just see it reaffirmed. But the point is, on this chart, we are rapidly approaching 1 standard deviation, which is just up here, and it's about 1850. And that's going to be a very important resistance. Let's go back now and look at our 12-day chart. This is probably the strongest of these charts, and the one that we use most. And this blue circle has been on this chart literally for months and months and months. And we forecast that this was going to be a likely turning point of this chart. And it's now at 2 standard deviations from the mean, of the Danielcode trading channel that's been running since March 2009. So this is really flashing some warnings that this market is overbought. It doesn't mean there's going to be a crash. It doesn't mean there's going to be Armageddon or any of that stuff, but it does mean that the market is seriously due for a correction. And once it starts to correct, its first target will be the median, which is this thicker blue line, which just moving it on a few months is going to be around 1622. And that's the minimum correction that it's going to have. It could decide to go down 2 standard deviations, in which case it would be down in the 1400s. So that's our 12-day chart. And here's our 6-day chart, our prime timing chart. You can see the 2007 high, for those of you that haven't seen these charts before, came exactly at a 59 cycle. We forecast that. This low here, March 2009, came exactly at a 59 Danielcode trading cycle. I wrote about that. I was actually running a tutorial in Taupo. Some of you were there. And we called this low to the day and a couple of ticks, days and weeks in advance. The amazing thing about this market, if you think markets are disorganized, have a look at this. This is the S&P all the way from March. It's been in the same Danielcode trading channel the whole time. And it's been perfectly organized. Here was our last significant time turn, and we got about a 5-bar correction from that. Don't forget, each of these bars is 6 trading days. And we now have another time cycle coming up. This is in not till next year. We've got more updated information than that, but the point I want you to get is we're very close to 2 standard deviations from the mean, that top dotted red line, and this market has not moved on the upside, strong as it's been, more than 1 standard deviation from the mean since March 2009. It is very, very unlikely to get past that 2 standard deviation mark, and that is where we would expect a correction. If you go to the Danielcode website, which is opening up now, you will see as it changes for you the view that you've got it now. Along here, if you are subscribed or doing a trial, you will have access to the 4th seal, which is our revolutionary method excuse me, of forecasting major turns in markets. This particular page has 2 charts on it. It has a shorter term chart and a very long, this is the 24-day chart, and you can see these red lines are what we call the 4th or 5th seal. They're a geometric design that I invented in part 20 years ago and have updated since then. And they forecast with incredible accuracy the turning points of markets weeks, sometimes months in advance. And down at the bottom here, you will see that we've got a summary of what these markets are doing. The main thing to take from here is that we're still in a 59 cycle until November 29, and there are also 70 and 62 topping cycles that increases the odds for a top. So the 24-day cycle also is indicating that on the big picture, the 24-day chart's important 59 cycle expiring December, very close to some important 1 standard deviation lines, etc., much the same as I've been telling you. So we are getting to the stage that we are very, very overdue for at least a correction of this market. Incidentally, if you're interested in the 4th seal, we can let you have a trial of that. Contact Terry at support@thedanielcode.com. Here's the DAX. We do the DAX, S&P, crude oil, natural gas, copper, T-bonds, US dollar index, and gold. And we'll be happy to let you have a trial of any markets you like. And you can see this amazing phenomenon of time and price. And these markets turning at these red lines that you see is no accident. They are lines, they're the 4th seal lines that have been drawn months, sometimes years ago. And markets will eventually get there. And when they coincide with a Danielcode time cycle, they will also turn. I wanted to talk to you folks a bit about GMAG and give you some techniques on it. I'm not going to have time in this webinar because I know it's Thanksgiving Eve there, and I don't particularly want to keep you late tonight, and I have got a number of questions to deal with. So I will do another one on those. But for those of you who are auto trading, remember there are some manual things you have to do, particularly if contracts are approaching rollover. You have got to exit those contracts, usually 2 or 3 days before rollover. And if you know how, you can manually create the same signal in the new contract. But all of our programs work off the 057 protocol that Trade Navigator uses, which when you get a contract rollover, it imposes the new contract on top of the old contract, and it completely screws the auto trade function. So that's one of the obvious things. The other obvious thing is that you really, to get the most out of these auto trade programs, you need quite large account sizes, particularly in futures, not so in Forex because you can trade mini contracts. And if you look at mini contracts in Forex and the levels I've been telling you that you sort of need as a minimum stop in Forex, you know, if you were trading a mini contract, you're talking about $35 for a stop loss as the minimum. You can use a lot more if you want to. Some of these times you use the minimum stop, you will get stopped out, but probably around 74, 78% of the time it won't go back and take out that stop. But if you'd like a trial of the fourth seal, please contact Terry, support@thedanielcode.com. Now, let me just switch over to questions. Okay, let's have a look what we've got here. Can I comment on the oil and gold whipsaw over the last few days? How are these tradable? Mac, let me have a look at the chart. Well, here's oil, and the last few days, I take it you mean this horrible piece of market through here. This is now rolled to the new contract, which is the January contract. Let's go back, because it's pretty nice. We've got this sell signal. We've done quite well with this. Let's go back to the old contract, which I'll find in a second, which was the December 2013 contract, and I'll show you exactly what's happened there and what the problem with it was or is. December 2013. This is the old contract here. December 2013. Mac, the first thing that I teach you to do if you ever come to a tutorial is to put a Danielcode trading channel on these charts. And if you'd put a trading channel on this chart, you'd see that it's going nowhere. The trend is down. And the market is just working within a very, very tight range. And that's that consolidating market. When that's happening, the only thing that's going to save you is the stops. But if you put a DC trading channel on there, you could well have said to yourself, the bias is to the downside. You could have weighted your orders. Don't forget, you don't have to have all your orders as equal. So in this environment, if you wanted to trade it at all, you could have said, I'm going to take a few more contracts for the sell signals and fewer signals for the buy. If we look at gold, I mean, it's an inescapable fact that when markets are consolidating and there's no volatility, you're not going to make any money trading unless you're trading, sort of off 5-minute charts. Well, here was gold. I think I showed you a gold chart. We made a lot of money in this rundown through here, and then here it started consolidating and just going sideways. You have to, excuse me, I've got some people working here and my dogs are taking offense. And here, Mac, what's happened is this market's going to roll over. It's going into the new contract on Thursday, which the market will only be open in the early hours. So you've had 1, 2, 3, 4, 5 days going sideways. Markets will often do that. We'll put in that consolidation when they're approaching rollover. So it's a question of looking at it, the perspective of it. Look at your daily chart. Just excuse me a moment, folks. Look at the daily chart to see that a market is moving, and in a Danielcode trading channel that gives it some possibilities of profits. Okay, birds left, Fluffy's good, pips we've done. Mac, what markets are available? Yes, I can. I thought we'd put up a post about that already. Mac, we've got USD CAD, Canadian dollar, USD JPY, Euro USD, Euro JPY, Aussie USD, GBP USD, GBP JPY, and NZD, New Zealand dollar USD cross. They're the pairs that are available at the moment. Neil, I wanted to talk about GMAG, but I'm run out of time. Particularly this tutorial has to end on time because so many people have got commitments with the festive season, or the celebratory season at least, being upon us. Can I please talk about platinum April 2014 contract chart? James, I'm sure I can. Let me see if I can find the symbol for it. We don't trade platinum. I've traded it a lot. It's a very, very good market. NOP, let's see what we've got here. Where's platinum? Here we are. Let's go and start by looking at the 057 contract. Wow, love that. Great. Let's see if there's a 2 there. It's probably even better. This would be the market we trade. Look at that. It's absolutely fantastic. Well, just excuse me, folks. I'm just going to put you on hold for 30 seconds while I go and lock my dogs up. Just excuse me. Okay, folks, sorry for that interruption. Yeah, well, what wonderful, wonderful chart. James, what can I say? You probably got all the money on the way up and all the money on the way down. Marvelous, very, very dramatic. Tons and tons of volatility. Wish I'd been trading it. Good luck to you, mate. Okay, let's move on now, see what else we've got over here. And I think we're getting to the end of it. Neil, GMAG next time, sorry, he's got that. When I talk about Sage's trades, are they real money or sim? They're sim, Gary, and there shouldn't be any difference. The sim accounts that are available at Trade Navigator have slippage and everything else built into them. She's actually doing it manually. She gets the signal and she immediately goes to the chart and sees what the price is when she gets and reads the signal. So there's a degree of human error that we would expect everyone to be making in there as well. You can take them that they're pretty accurate. Is that really a valid comparison? The story about one of our tutorial guys doubling his account in 6 months, is that a valid comparison? Gary, we have guys doing that all the time, and there's very, very little difference between sim accounts and real money accounts. The sim accounts are probably a little harsher on slippage. They have a slippage factor built into them. I've been having this discussion with brokers and other people for 20 years, and I've traded hundreds of both sorts of accounts. sim accounts that are coming off a properly structured sim program, like the one we use at Trade Navigator, are incredibly accurate, and particularly if you're doing it in real time. Where these things become inaccurate is when it's not being done in real time, and you're seeing what the subsequent bars are. For the most honest person, there's a form of bias that comes into play, where you'll see people intend to invent rules or exceptions. But if you're running a sim account and you're actually putting the orders on in real time through an auto trade program, or immediately getting an alert and writing down where the market is, they're as accurate as can be. You don't have to have any worries about that. What's the difference with emotion? Well, that's the whole thing. People have different emotional reactions. There are some people who don't have a lot of emotion about trading. There are a lot of people who have huge emotion about trading. That's the majority. People have all different sorts of emotional sets. The more you trade and the more markets you trade, the less you'll let emotion affect you. The problem for most people is they're only trading one or two or maybe three markets. They're very focused on what's happening on the screen, and they're not following a process. They're trading emotion. It's the greed and fear kicker. You will get to the stage, if you trade the Danielcode way, that these markets, they all trade the same. There's no difference between gold and everything else, except gold's not one of the best because there are too many amateurs trading it. And when you get to just seeing it as a risk-reward bet every time you have a trade, a lot of that emotion will disappear. But it's probably like, I don't know, I was going to give you an analogy, but we have a mixed audience here, so perhaps I shouldn't. But Gary, the more you do it, the more you'll get comfortable with that emotional element. James, do I think platinum's bottomed? I have no idea. If I did a fourth seal analysis on it, I could tell you exactly when it's going to bottom, and I could tell you exactly what the price would be, but I haven't done that. Neil, yes, emotions are the grail. That's right. Look, it's a different question for everyone. Gary, come along to a tutorial, and I will spend 3 evenings talking to you about it till you're sick and tired of hearing it. Emotion is a huge, huge problem for traders. We have any number of people who can trade sim accounts absolutely perfectly. They don't. They follow the rules. They don't interfere with the program. They get onto real money and they start, oh, gee, it's a lot of money. I'll take the profit, which is, very nice. But it doesn't always work that way. It's often, the market's going against me. I'll move the stop up, and then the market promptly reverses and it goes where you thought it would. But anyway, folks, there's a little bit more than our 60 minutes for the day. I do thank you for your attendance. Toddy, nice to hear from you too, mate. All you folks who are going to Waiheke, I'll see you in a couple of days. Those of you having a Thanksgiving break, do enjoy. I thank you for your attendance today. I suggest that you switch off your computers, have a rest, relax, and enjoy the time with family and friends. Marcel, lovely to see you, my friend. I hope you're in good health. Oh, Fluffy, you're going to pick me up. Look, Fluff, if it is convenient, pick me up. It would be lovely to see you. If not, don't worry. I can get a cab to the airport or the hotel, wherever, depends which way I'm going, I guess. But that's fine. I'm going to be out of the office, folks, for a week while I'm in Waiheke. You might note a little bit of difference in the time frames for the posting of signals and charts and stuff, but we try to keep it. As good as we can. So thank you for your attendance, folks, and I'll look forward to seeing you at the next webinar. Bye-bye.